If the Fed moves away from this data dependency, I think there will also be a shift on how the market perceives the dollar. Stephen Innes, OANDA. On Tuesday, the RBA will announce its interest rate decision. The market currently expects they will keep their rate unchanged at 1.5%. Do you agree with the market forecast, and do you think we may get any hints into the RBA's future moves?
Well, after a momentous events of last week, traders are definitely focusing on central bank and central bank rhetoric, and more specifically with this convergence argument that's been going on basically since the beginning of last week, where we're seeing a more hawkish presence from central banks. So now traders are looking for comments from the Reichsbank and also the RBA in particular, which comes out tomorrow, to see if they're going to change their shift from a neutral stance to a more aggressive hawkish stance. So this is all going to play part and parcel to this shifting narrative about a global bank consortium moving towards this global hawkish rhetoric. However, I'm of the view where I constantly see the RBA's moving with a glass half full, in the sense that they've been very, very reluctant when rates were going down to chase the 0% game. Likewise, I think their focus really is on inflation, and I'm discounting the current market's view, in the sense that I think we're getting a little bit too optimistic and a little bit too overzealous on this global central bank theme. So my view is I think the RBA is still going to maintain a glass half full approach, keep the policy on neutral, and perhaps surprise the Aussie bulls tomorrow afternoon.
On Wednesday, the US FOMC meeting minutes will be available. In June, the US Federal Reserve raised rates to 1.25%. Stephen, what do you expect the meeting minutes to reveal?
Well, I think I have to look between the lines on this one. We're looking at a Fed that's been looking past one of their big issues, which is inflation. They've come out and stated pretty aggressively they're going to look past the tepid inflation implications of Q1. However, I think we have to look at stuff objectively here. The Fed has come off sounding very, very hawkish, almost to the point where they're no longer going to become data dependent. So I think in these minutes, I think it's going to be key to see if there's any of this shift in rhetoric, moving away from data dependency, and perhaps articulating their recent view, which is more concerned about the elevated prices on asset markets. For instance, the elevated valuations on equity markets. I think this may come to the fore, and I think this is where the market's underpricing the Feds right now, because currently there's an argument going on in place right now that the Fed is sounding far too hawkish for what the economy has actually been dictating. But if the Fed moves away from this data dependency, I think there will also be a shift on how the market perceives the dollar, and the possibility that the Fed may continue to raise interest rates aggressively to defend against these elevated asset classes.
And also on Wednesday is the ECB's non-monetary policy meeting. What do you think the markets can expect from this?
Well, it was probably a little bit too early to include the comments, the aggressive comments that Draghi came up with midweek. However, I think there's going to be a lot of focus on any of the QE tapering rhetoric, if that's included in these comments. So the markets are going to be looking for some sort of consensus or some sort of agreement amongst policy members that they're actually moving towards tapering these emergency funds that they've been providing the market, or what we refer to as the gravy train for the past several years. One of the issues I have was how aggressively the market had sold off on EU equities and also EU fixed income after Draghi's comments. So I do think there's probably going to be an element where there may be some sort of tempering of these market expectations, and I think that's why we're seeing the euro sitting a little bit neutral right now. It's opened up almost with a whimper this week. It hasn't chased the top side aggressively. I think the market's really waiting to see if there's any interesting dialogue that's going to be put forth on Wednesday.
Thank you for joining us today, Stephen, and providing your insight. So that's what to look out for in this week ahead, but be sure to stay tuned for our ongoing coverage.